Before we start this video, do like and subscribe to our channel and not miss on any updates.
Let's have a look at the next question. Alhpa and Beeta were partners in an LLP named Metachem LLP, sharing profits and losses equally. So the existing profit sharing ratio is 1:1. The balance sheet as on 31st March of 22 is given below. Capital Alhpa, Beeta 3 lakhs and 2 lakhs. General reserve. Now whenever there is a reconstitution, that is admission of a partner or retirement of a partner, what do? This general reserve we transfer to the existing partners. Then we have workmen compensation fund. Now whenever you see this term fund, that is also finally belonging to the existing partners only. But if there is some expenses to be made out of this fund, we have to deduct that expenses and only the balance amount will be transferred to the partner's capital account. So one is the general reserve, one is the fund. It could be a building fund, it could be any other fund, any other expenses fund that has to be transferred to partner's capital. But say for example, out of this 60,000, we have to pay 10,000 of workmen compensation. Then only the balance 50,000 will be transferred to the partner's capital. Term loan from IDFC Bank, trade payables. Factory building, plant and machinery, office furniture, inventory, trade receivables, bank. Simple, straightforward. They agreed to admit Gamma, all this alphabets used in science and mathematics, as partner from 1st of April on the following terms. He shall have 1/6 share in future profits. So the future profits will be 1/6. New profit sharing ratio would be 3:2:1. So 1/6 is Gamma's share. And Alhpa and Beeta, the share has changed. Now what do we need to do? We need to see if someone has sacrificed, to what extent they have sacrificed, and what should be done with the goodwill. He shall bring in 2,50,000 as his capital, credit to capital account. Goodwill of the firm is to be valued at 3 lakhs, again straightforward. Factory building is to be appreciated by 20%, inventory is revalued at 70,000. Machinery to be appreciated by 20% and office furniture to be revalued at 50,000. Of the trade receivables, 3,210 are bad and 5% be provided for bad and doubtful debts. There is no actual liability towards workmen. Now here is where it becomes very important, because there is no actual liability, this money belongs to the partners fully. Okay. Then you are required to prepare revaluation account, partners capital account, bank account and balance sheet after admission. Now in this entire question, other than the workmen compensation fund, there is nothing else which needs a specific treatment. So let us get on to preparation of revaluation account, partners capital account, bank account and balance sheet after admission. So now let's start looking at the adjustments and information and pass necessary entries, right? So what we will do, revaluation account, and here itself alongside it we will prepare bank account wherever we have to pass entries related to bank. Then we have the partners capital account and we'll have the balance sheet. Okay. So let's come back to the question. They agreed to admit Gamma. Okay. He shall have 1/6 share in future profits. Fine. New profit sharing ratio is given. He shall bring 2,50,000 as his capital. What is the entry? Debit bank account, credit Gamma's capital account. So in Gamma's capital account, you would say by bank account 2,50,000, and in the bank account you would say to Gamma's capital account 2,50,000. Side by side, let us also bring down the opening balances. By balance brought down, Alhpa and Beeta 3 lakhs and 2 lakhs. So 3 lakhs and 2 lakhs. Okay. So Alhpa and Beeta 3 lakhs and 2 lakhs, Gamma by bank 2,50,000. Fine. Then goodwill of the firm is valued at 3 lakhs. So goodwill they have directly given. So we can take this goodwill number and we will see how much should be Gamma's share, that is how much amount should be debited to Gamma's account and how much should be credited to the remaining two partners account, right? For that we need what? We need to calculate the sacrifice ratio. Alternatively, you can also prepare the table, that is crediting existing partners in the old profit sharing ratio and debiting all the partners in new profit sharing ratio. So you can do it either ways. So let us prepare the working note. Goodwill adjustment. Sacrifice ratio is equal to old profit sharing ratio minus new profit sharing ratio. Okay. So for Alhpa, old profit sharing ratio is 1/2. For Beeta, also old profit sharing ratio is 1/2. Okay. Then what is the new profit sharing ratio? New profit sharing ratio for Alhpa, if you see, that is also 3 by 6. New profit sharing ratio of alpha is 3 by 6. Of beta, it is 2 by 6. Okay. Now, 3 by 6, can I write it as 1 by 6? Now, 3 by 6 is how much? It is 1 by 2. So, if you see, the sacrifice of alpha is 0. How do we get that? In the denominator, you have 6. In the denominator, 2 and 6, the LCM is 6, or we can also say 6 into 2, 12, and you can do it with 12 as well. So, 12 is denominator. Now, in the numerator, you have 6 multiplied by 1, 6 minus 2 multiplied by 3, 6. So, that is 6 minus 6, which is 0. Okay. Now, coming to beta, what can we conclude? Entire sacrifice has been done by beta only. So, 6 multiplied by 1, 6 minus 2 multiplied by 2, 4. 6 multiplied by 1, 6, 2 multiplied by 2, 4, and down below here you can write 12. Okay. So, 6 minus 4 by 12, you can say 2 divided by 12, which is nothing but 1 by 6. So, only beta has sacrificed, hence the entire goodwill share has to be credited to beta. Okay. So, gamma's share of goodwill is how much? Goodwill, they have said it is valued at 3 lakhs. So, goodwill of 3 lakhs and gamma share would be 1/6 of 3 lakhs, that is 50,000. Right. Now, this 50,000 in the partner's capital account, what will you write? You will credit beta. So, by gamma 50,000. In gamma's capital account, you would say to beta 50,000. Okay. Now, if you do not want to calculate the sacrifice ratio and if you want to adjust the goodwill using table, then how will you do? Credit goodwill in old profit sharing ratio, alpha and beta. Now, what is the total goodwill? Total goodwill is 3 lakhs. So, 1,50,000 here, 1,50,000 here. Debit in new profit sharing ratio. How much is alpha? Alpha is 3 by 6. So, 3 lakhs into 3 divided by 6. Here it is 3 lakhs into 2 divided by 6, and gamma 3 lakhs into 1 divided by 6. So, what has happened? You credited in old profit sharing ratio, debited in new profit sharing ratio. What is the difference? 1,50,000 minus 1,50,000, credit minus debit 0. So, beta credit minus debit 50,000, gamma minus 50,000. So, basically what it means, you will credit beta by 50,000, you will debit gamma by 50,000. Either ways you can do it in the examination, right. So, we have done the goodwill adjustment perfectly fine. Then moving on, factory building is to be appreciated by 20% and inventory is revalued at 70,000. So, now let us prepare the revaluation account. First thing is, factory building is to be appreciated by 20%. So, 4,78,000, 20% of this is the upward revaluation. So, by factory building 20% of 4,78,000, that is 478,000 into 20%, we get 95,600. Okay, 95,600. Then inventory revalued at 70,000. What is the existing inventory? 77,740. Now we have reduced it. So, to inventory 77,740 minus 70,000, that gives me 7,740, right. Then of the trade receivable, 3210 are bad. So, we have to write off debtors by 3210. So, debit side, because it is a loss, to debtors 3210. And then it says 5% provide for bad and doubtful debts. Now, we have 143,210. Out of this 3210 you will write off, and of the balance you will create a provision for 5%. So, to provision for bad debts, 143,210 minus 3210 multiplied by 5%. So we have 1,43,210, 143,210 minus 3,210, 1,40,000 into 5%, 7,000 as provision for bad debts. Okay. Then machinery to be appreciated by 20% and office furniture to be revalued at 50,000. So machinery also appreciate by 20%, 341 into 20%. So by plant and machinery, how much? 20% of 3,41,000. So 341 into 20%, we get 68,200. Okay. Then office furniture to be revalued at 50,000. We have 55,850, bring it down to 50,000. So to furniture, how much is that? 55,850 minus 50,000, that will be 5,850. Okay. So that is also done. There is no actual liability towards workmen. Now please understand, this is a fund, it will not come to revaluation account. We will transfer that directly to the partners capital account. In which ratio? In the old profit sharing ratio. So how much is the workman fund? Workman fund is 60,000. So in the partners capital account, we will say by workman compensation fund. Okay. Now who will get the share in this? Only Alpha and Beta in 1:1 ratio. So 30,000, 30,000. Now having posted all the entries, let us go to the revaluation account and see what is the profit or loss. So profit side is higher, so there is definitely a profit. So let us do the totaling. 95,600 plus 68,200, it is 1,63,800, 1,63,800, and the same number we can write down on the total side this side. What is the profit? 163,800 minus 7740 minus 3210 minus 7,000 minus 5850. If I do, I get 1,40,000. Right. Now this 1,40,000 of profit to capital accounts, Alpha half of 1,40,000, that is 70,000, and Beta also half of 1,40,000, that is 70,000. Okay. So this is the revaluation account. Then coming to bank account, to balance brought down, we have opening balance of how much? 44,200, and we don't have any other entries, by balance carried down 2,50,000 plus 44,000, 2,94,200, that is the closing balance. Then coming to partners capital account, please remember there is one more item which is general reserve. Now this general reserve also has to be transferred to partners capital account equally. So by general reserve, $1,80,000, so 90,000 and 90,000, Alpha and Beta. Then we have the revaluation profit. It was 70,000 each, so 70,000, 70,000, 70,000, 70,000. Okay. So now if you do the total, 3 lakhs, 3,30,000, 4,20,000, 3 lakhs plus 30, 3,30,000 plus 90, 4,20,000 plus 70, 4,90,000, 4,90,000 is the total here, and here 2,50,000 plus 30, 2,80,000, 2,80,000 plus 90, 370, 370 plus 70, 4,40,000, and here it is 2,50,000, right. Now what is the closing balance? To balance carried down, 4,90,000, 4,40,000 and 2 lakhs. So with that we complete the partners capital account. Now coming to the balance sheet of reconstituted firm, we have factory building which is given to be 4,78,000, add revaluation. So revaluation was how much? Revaluation was 95,600. So 95,600 total is 478 plus 95,600, 573,600. Then we have plant and machinery, add revaluation. So plant and machinery 341,000. Add revaluation. Revaluation is 68,200. So it will be 341 plus 68,200, 4,09,200. Then we have office furniture. Office furniture 55,850 less revaluation 5850. So we have 55,850 minus 5850, 50,000. Then we have inventory 77,740 less revaluation loss 7740. So 7,740 minus 7740, we get how much? 70,000. Then we have trade receivables 143,210 less bad debt 3,210 less provision for bad debt. So provision for bad debt is 7,000, right? So 1,40,000 minus 7,000, you get 1,33,000. 1,33,000. Then bank account, the closing balance in the bank account what we had calculated is 2,94,200. So here you will write 294,200. So if I do the total, please do it on your calculator. You get 15,30,000. 15,30,000. Now come to the liability side. On the liability side, you have capital accounts, alpha, beta, gamma. Alpha, beta, gamma. So from here you can take 4,90,000, 4,40,000 and 2 lakhs. And if you do the total, total is 11,30,000. Then general reserve no longer existing, worksman compensation fund no longer existing, term loan is 278,000, and we have trade payables. How much is trade payable? Trade payable is 1,22,000, right? So if you sum this up, you get 15,30,000. Again, a very simple and a straightforward question. Just that there was this worksman compensation fund, which is also a very simple adjustment.